As a computer gamer might say when preparing to take on a tricky new level, it's on like Donkey Kong. That pretty much sums up the reaction of traders to Atlanta Federal Reserve Governor Dennis Lockhart's tape bomb on Tuesday, when he said there was a high bar for him not to vote for an interest rate increase next month. Given Mr. Lockhart's status as an informal bellwether among Fed officials, this ratcheted up expectations that the US Central Bank is finally ready to lift borrowing costs for the first time in almost a decade. As a result, the 2-year Treasury yield, the indicator most sensitive to changes in the Fed benchmark rate, ripped to a high of 0.76% on Wednesday, lifting the spread, or the difference, the equivalent German bond yield, to almost 100 basis points. That's the highest since 2007. In addition, the dollar jumped sharply, with the DXY greenback index at its highest since April. On Wednesday, disappointing ADP jobs data lessened some of the impact of Lockhart's comments. It showed that the number of new jobs created slowed to 185,000 in July, less than even the most bearish of estimates. US trade deficit figures also showed a widening in June, as a stronger dollar continued to weigh on exports. These data releases dented the greenback's rally and offered some succor to treasuries and emerging market currencies, which had slipped to the lowest levels since at least 2000 earlier in the day. However, the ADP jobs report is a flawed and lagging indicator that should not be overinterpreted. Wednesday's ISM non-manufacturing index, by contrast, jumped to its highest level in 10 years. Moreover, the Atlanta Fed governor's comments are a clear indication that the central bank is preparing to raise rates in September. Tellingly, after the ISM data release, the 2-year Treasury yield climbed again swiftly afterwards, as we can see from this chart. Two more US non-farm payroll reports, the most widely watched gauge of the labour market, are due out before the Fed meets in September, with the first one due already on Friday. Economists polled by Bloomberg expect 225,000 jobs to have been created. If that is true, the markets will begin to pencil in a September rate liftoff even more firmly.